Hello and welcome to the Fibonacci free video for Friday, May the 5th. This is David, and let's take a look at Tesla. And this has been on my radar because last week we found a low pretty much right at symmetry in terms of both time and price. So when we use our Fib projection tool and measure this move down from Tesla's February high to March low, and then project down from this high at the start of April, we'll notice that this low last week was right at the spot where those two moves are equal. Now, if we also measure the time spent in this initial decline, and then measure, project that forwards from the time we made the high back here at the start of April, we'll notice that the move into last week's low, again, was pretty much within a few 2-hour bars of where those two moves would be equal. And we note that because it is a good spot to often look for a reversal. So, so you might ask, why are we identifying this today as opposed to back here last week? And it really comes down to this. It comes down to the fact that what I was saying back then is that, look, the Voodoo fire line, the most important level from the Voodoo Lines, is up here at 204 and 26 cents. We got above that back in February for a little bit, found resistance there and went back down, resistance again back here late March, early April, and that's what sent us down, but it sent us below the Voodoo tree line, the second most important level. And to really feel like we were heading up, I wanted to see us back above that 167.50 Voodoo tree line, and we did climb above that today. We could dip a little below, but so long as we either mostly hold or continue to press above the that 167.50 Voodoo tree line, I'm going to keep looking towards the upside. How far up? Well, certainly clearing the fire line will be important, and there could be resistance at that fire line level if we do head up. But what I'll be looking to do, look, if we have finished a counter trend move down and we're going to reverse and turn back up, then an initial target would just be coming in and measuring down from the February high into last week's low, and then identifying a target one as being 127.2% of that initial leg. That comes in at 235 and 41 cents, and then the target two, 161.8% external retracement, comes in at basically 258. So look, I would be cautious, as I said before, near that 204.26 level, because it is an important level. But if we can get beyond, then maybe look towards those upper targets. So that's what I'm looking at here in Tesla. I hope you found it useful, and I will see you at the next update. Hey, David here with Simpler Trading. Thanks for taking a few minutes to watch this video. I hope you found it useful. And if you did, please help us out. Click the like button. You can also add your comments below. We love to read those and respond to them. You can also click the bell icon. That will alert you whenever we have new and updated videos. And if you want to watch us trade in real time with our own money, you can visit simplertrading.com to learn how to sign up. Until I see you again, as always, good trading, and we'll see you at the next video.